Blockchain and digital assets are transforming corporate operations by introducing new efficiencies and capabilities. These technologies enable businesses to create, manage, and transfer value in ways previously impossible. Forward-thinking companies can leverage digital assets to unlock significant operational and financial advantages. The emerging market represents a potentially massive $10 trillion opportunity that few are currently discussing. Chapter 1: The Hidden Giant in Corporate Operations. While public attention focuses on retail cryptocurrency trading, a massive transformation is quietly reshaping how corporations manage assets, execute payments, and optimize operations. This hidden revolution represents one of the largest wealth creation opportunities in modern business history. The corporate digital asset market is projected to reach nearly $8 trillion by late 2025. Institutional treasury adoption and blockchain integration are fueling this rapid expansion. Overall, the market is experiencing an explosive growth rate of approximately 300% across industries. From vaults to blockchains, the new treasury frontier, digital corporate treasuries have surged to $4.11 trillion as of August 2025, reflecting a major transformation in corporate asset management. Leading companies, such as CEA Industries, are strategically holding substantial digital assets, including BNB tokens worth over $330 million, emphasizing long-term allocation rather than speculation. Institutional investors are increasingly embracing digital assets, exemplified by $290 million in inflows to BlackRock's Bitcoin ETF. This trend highlights growing confidence and mainstream adoption of digital assets across both corporate and institutional sectors. Blockchain innovation is transforming treasury operations by dramatically increasing efficiency and speeding up financial processes. ANZ's Project Acacia showcases this with a tokenized payables system that reduces settlement times from days to minutes. The European Central Bank's Pontus pilot demonstrates institutional adoption of blockchain through DLT-based settlement using central bank money, starting in 2026. Germany's NRW Bank issuance of the first digital bond under new EWPG legislation sets regulatory benchmarks, establishing a framework for future European digital finance initiatives. Chapter 2: The $10 trillion Tokenization Revolution. The tokenization of real-world assets represents the largest digitization opportunity in financial history, fundamentally changing how we think about ownership, liquidity, and value transfer. The tokenization of real-world assets is projected to create a $10.9 trillion market by 2030, transforming traditionally illiquid holdings into tradable digital assets. Real estate, both commercial and residential, will enable fractional ownership, increasing accessibility for investors. Fixed income instruments, including corporate and government bonds, will become more liquid and easier to trade. Alternative assets such as art, collectibles, and private credit will also open up to a wider investor base, democratizing investment opportunities. Analysts project the tokenized real-world asset market to reach $16 trillion by 2030, signaling a massive growth opportunity. Major financial players like BlackRock, JP Morgan, and Franklin Templeton are pioneering innovation through Layer 2 blockchain platforms. Despite this momentum, privacy issues and regulatory compliance pose significant challenges. Addressing these hurdles will require advanced technological and legal solutions to fully unlock the market's potential. Atoms to bits, the future of ownership. Privacy remains the primary obstacle to widespread enterprise blockchain adoption, as public blockchains often conflict with the confidentiality requirements of institutional investors and corporate operations. Jeremy Allaire, CEO of Circle, highlights this challenge as central to blockchain integration. Fully homomorphic encryption, FHE, offers a solution by allowing encrypted transactions that maintain compliance without exposing sensitive information. Chapter 3: Real-world impact and use cases. Beyond theoretical potential, digital assets are already delivering measurable value across industries, from payment processing to asset management and operational efficiency. B2B payments face significant inefficiencies, with legacy systems imposing 3% plus fees and multi-day settlement times that strain cash flow and operations. Blockchain offers near-instant, low-cost settlement, fundamentally improving working capital management and operational efficiency. The market is already validating this shift, with stablecoins settling $30 trillion annually and innovations like on-chain FX swaps and yield-bearing stablecoins gaining traction. Leading enterprises such as PayPal, Deloitte, and Anchorage Digital are developing scalable crypto payment solutions to meet corporate demand. CEA Industries is building the largest corporate BNB treasury, aiming to hold 1% of the circulating supply by 2026. The company focuses on generating revenue through staking rewards and optimizing blockchain transaction fees. This strategy marks a shift in corporate treasuries from speculative holdings to deliberate, strategic asset allocation. The case illustrates how corporations can leverage digital assets for both yield generation and long-term strategic positioning within the blockchain ecosystem. Institutional adoption of digital assets is accelerating as traditional banks and financial institutions increasingly integrate blockchain solutions. U.S. banks are resuming Bitcoin custody services in response to growing demand and clearer regulations. Major investment vehicles, such as BlackRock's Bitcoin ETF and tokenized funds, are attracting billions, demonstrating strong institutional interest. Additionally, JP Morgan and Société Générale are issuing digital bonds on blockchain, highlighting the convergence of traditional finance with innovative capital market structures. Chapter 4: Strategic Imperatives for Businesses. Success in the digital asset revolution requires understanding the competitive landscape and positioning your organization to capture emerging opportunities. The digital asset race involves a range of players shaping adoption and market access. Centralized exchanges like Coinbase and Binance lead trading, while banks such as JP Morgan and Goldman Sachs integrate crypto into traditional finance. Wallet providers, blockchain infrastructure firms, and payment services, including MetaMask, Chainlink, PayPal, and Stripe, enable user adoption and seamless transactions. Brokers and decentralized exchanges like Robinhood and Uniswap further democratize access, allowing both retail and institutional participants to engage with digital assets. Regulatory clarity is improving, with key countries establishing clear digital asset legislation and frameworks like the EU's MiCA and US SEC guidance providing legal certainty for institutions. Financial institutions report high compliance readiness, demonstrating their ability to operate within evolving regulations. Simultaneously, digital asset infrastructure is maturing, enabling scalable and compliant operations. To capture the $10 trillion opportunity, organizations should integrate blockchain-based treasury and payment solutions now to achieve immediate efficiency and cost benefits. Investing in privacy-preserving technologies, such as fully homomorphic encryption, ensures operations remain compliant and confidential. Building strategic partnerships with fintech innovators and regulatory bodies helps companies stay ahead in a rapidly evolving landscape. Overall, proactive adoption of technology, privacy safeguards, and collaboration is key to capitalizing on this emerging market. The digital asset revolution, projected to reach $10 trillion, is fundamentally transforming corporate operations and creating unprecedented value. Organizations that adopt early can gain strategic advantages, including improved liquidity, operational efficiency, and innovation. The competitive landscape favors those who act decisively, as the race for digital asset leadership is already underway. Companies must choose whether to lead in this transformation or risk falling behind. Please like, subscribe, and join me in the next video.